Hello, you're watching BiTV European Service. I'm Ines Bouget, and today we welcome Nigel Almond. Hello, Nigel.
Hi, Ines. How are you?
I'm good, thank you. Thank you for joining us. So you are Head of Data Analytics EMEA at Cushman Wakefield, and you've recently published a study called The DNA of Real Estate for the third quarter of 2020. My first question is easy. What do you take away from your study?
Okay, so the DNA of Real Estate is one of our sort of key publications. It sort of tracks the rents and yields across a core set of 48 locations across Europe. In terms of the last 6 months, we've seen some sort of very clear trends, sort of compared to where we were right at the beginning of the year. I guess if we start off with the retail sector, and that's one where we're already seeing some declines in rents, sort of the back end of last year, and that's really sort of continued this year, albeit the pace of falls has sharpened sort of quite a bit over the last 6 months. So in the year ending sort of Q3, we were seeing sort of rental falls on average across Europe of 7%. Now contrast that to the office sector, where on an annualized basis we still see positive growth of 1%, albeit sort of quarter on quarter we've seen one or two sort of minor falls, so sort of clearly sort of weakening there. And these are the sort of headline rents, so sort of ignore any additional growth and incentives that we've certainly seen, certainly over the last 3 months, 6 months in some markets. The logistics, of course, is a sort of completely different story, remains sort of robust, positive, growth slightly down on where it is, but still showing the strongest growth in terms of rents over the last sort of 12 months at 2% per annum. And that's really been insulated from the pandemic. So rising online sales, importance of supply chains providing sort of essential goods and services to individuals, so it means that sort of sector has held up certainly for the best space and the best locations. And I'd then say the investment market's really sort of following that trend. So, continuing on the logistics side, we continue to see compression in prime yields. So prime yields were down sort of 25 basis points across Europe over the last year. And when we look and sort of dive into that trend continuing, so that continued compression means yields in some markets, so across France, across Germany, we're now sub 4% for logistics yields, which is sort of unheard of sort of historically. On the office side, so the rate of compression's really sort of come down and sort of broadly flat yields across the board. In fact, we did see in sort of the second quarter some outward shift, but then in some key markets, core markets, that yield has actually crept back in. So markets have reopened, and sort of we've seen that sort of investor demand for the best quality assets sort of remain. But then on the flip side, for retail, we see yields sort of edging out, and they continue to sort of move out, sort of across many markets. So that's sort of really continuing that trend that we've seen in the last 12 months or so across the retail sector on the high street.
Right. Now, let's narrow down a little bit to France. How is the country doing on all the various markets compared to other European counterparts?
So I think when you're comparing sort of France, and in particular if you compare sort of Paris, you'd really sort of compare against the likes of London, central London, and some of your key German cities, and the markets are performing really in line with what we see sort of elsewhere. So I think as we enter this pandemic, if you look at sort of the French office market, and certainly sort of Paris, we had low vacancy, particularly in the central districts, and that's really sort of maintained sort of broadly sort of stable, some marginal sort of rental growth, and sort of yields, although they edged out, say in Q2, we've seen that sort of creep back in. So they're sub 3% across Paris, and we saw a similar trend, in sort of London's West End. So they kind of mirror what we're seeing there now. I think if we sort of broaden out, so if we looked at other districts in Paris, so La Défense, you've got higher vacancy, perhaps more pipeline coming through. That, is perhaps a weaker sort of sub-district of Paris compared to the others. And then, across, the retail sectors, logistics sectors, we see the similar trends that we've seen across the rest of Europe.
All right, and obviously the third quarter has been hit by the second wave of the COVID-19 pandemic. How will the lockdown and the curfew measures affect the figures highlighted in your study? What are the perspectives now?
So, I think as we sort of we look at the outlook, and certainly before we had that second wave of lockdowns, we'd already seen a weakening in demand. We've seen sort of weaker sort of GDP numbers. We've seen sort of rising sort of unemployment in markets now. To date, the office sector perhaps less impacted by that compared to, say, retail, sort of travel and tourism. So, we've certainly, I think our outlook was, we're expecting sort of a weakening in sort of rental growth in the office sector, further weakening in the retail sector, logistics still holding up. Obviously the second lockdown will have a further impact, and I suspect sort of retail impacted more by that, particularly where you've got non-essential shops shut. I think it's hard to sort of differentiate, because we've got in different countries, you've got different sort of sets of lockdowns, and I guess the different ways in which sort of companies are having to adapt to that. I think the perhaps the bigger concern is the longer term outlook, and how maybe this second sort of wave, second set of lockdowns, if they are, hopefully if they're short, perhaps less of an impact compared to if we have sort of a more prolonged sort of lockdown sort of coming through. I guess the bright side is the news that we've seen over the last sort of probably week, the announcement last week on vaccines, and some news earlier this week, and that provides some sort of light. I'm not saying that the vaccine is a silver bullet for the markets, but it provides some hope. And we've certainly when we look at the equity markets and on the retail side, seen a bounce back in the prices over the last week, certainly on the listed sort of REITs, in particular on the office and the retail sector. So that should, provide some hope for next year and the opening up, and that we don't see a sort of a longer term, some negative sort of impact coming through.
Nigel Almond, thank you very much for this. Thank you for joining us. See you all soon on BiTV.